Finally, a slowing down of condo and HDB prices. Hi everyone, my name is Casey from Home Quarters. This is Singapore Property Market Update for May 2023. Let us start with the general news. MAS likely to maintain monetary policy stance for the rest of 2023. Economists. As some predicted, MAS ended its 18-month streak of hikes with an economic slowdown that could be sharper than expected. Growth has slowed significantly, and according to economists' estimates, inflation has peaked and is likely to moderate going forward. It would seem that MAS' concern about a slowdown in growth are outweighing inflation considerations. Distressed property listing jump in Q1 as bankruptcy rises. With more expected in the second half of 2023, bankruptcy application rose 5.6% in Q1 from the previous quarter. Distressed industrial listing also more than tripled in Q1 when compared with Q3 of 2022 due to rising interest rates, the tougher business climate, and challenging condition for business continuity. Competition in Singapore co-living sector cranking up, with more operators entering the niche sector that saw a surge in 2021 and 2022. However, it may all be too late as demand seems to be dying down. Still, overall, demand is expected by most analysts to stay above pre-pandemic level. What property bubble? With global outlook projecting headwinds, rising interest rate bringing about soaring mortgage rates, raging inflation in many major world economies, and harsh pandemic-related shutdown over the last 2 years, major property market like the UK and Australia has been badly hit. Yet, Singapore has managed to defy the odds due partly to construction delay during the pandemic, which has meant that the property market stayed hungry due to low supply. Heavy investment from overseas investors, particularly cash-rich mainland Chinese, attracted by Singapore's safe haven status, has resulted in several large bulk purchases that have kept the property market buoyant. Furthermore, commercial shophouses that are not subjected to the additional buyer stamp duty also provide investors with an enticing proposition in the price range of about $10 to $50 million, which sits nicely in the wheelhouse of this cash-rich investor. Even some of the largest Hong Kong-based real estate investment trusts have set their sight on Singapore. Home Quarters thinks that hopefully the same sentiment of the MAS will be shared by our foreign counterpart, which will bring the interest rate to come down to pre-pandemic level. On the rise of distressed properties, we expect that such a number in the industrial segment will not be translated to the residential segment, considering that it is still buoyant and houses can be sold with private treaty and not auction. We have seen quite many co-living companies asking for rental during the pandemic period, but they have significantly dropped due to higher market rental and thus a lower margin for them. Even with the new ABSD for foreigners doubling to 60%, if you want to find out more, we have done a video link here or even here. Much of Singapore's property market is fueled by local demand, thus the property market behaves differently in Singapore as compared to the UK and Australia. Alright, let's move on to private property. The hunt for rental yield. Last year saw rent of private home soars far outpacing the rise in private home sales price. The URA's private home rental index surged 29.7% in 2022 over the previous year. The jump in rental yield was a result of low supply caused by pandemic-related construction delay and high demand for the return of expatriates, students, and foreign workers with the reopening of the economy. This year, we can expect the tight supply condition to improve with almost 17,500 units expected to get their TOP. Private home prices accelerate in Q1, rising 3.2% on low volume. As compared to the previous quarter, several big launches in Q1 drove a surge in sale at new benchmark even as economic headwind continued to mount. With the expected increase in supply in the pipeline and economic pressure, prices will likely to continue to increase but at a slower rate, especially if rental yields remain high. Buyer sentiment turns cautious as Q1 new home sales fall below that of last year, indicating maybe perhaps that buyers becoming wary of the flood of upcoming new launches in the midst of what many are expecting to become a sharp economic downturn. Take-up has largely moderated as interest rate hit record highs and economic outlook turns gloomy, especially in the price-sensitive mass market segment. The luxury segment, perhaps being less dependent on debt financing, is expected to support demand in the prime district. However, many expect to see sales supported by several new launches in the upcoming months. Furthermore, as unsold inventory diminishes, emboldened developers are likely to raise prices with sustained demand. Resale condo volume price rise for the second straight month. In March, as buyers switch after new private home prices far outstrip resale condo prices. Most resale transactions were in the prime district and city fringes as suburban resale condo prices grew a lot and the most drawing buyer back into the other two areas instead. However, the rebound is not expected to be sustained under high pressure from high interest rate and slowing growth on buying sentiment. Home Quarters thinks that rental is stabilizing the market now with prices here to stay due to the highest interest rate needed to be paid by the landlords. As expected from the various cooling measures, the prices are still increasing but at a slower pace. Also, with unsold inventory becoming lesser and lesser, interest will go to the resale segment. Give Home Quarters a call or text at 8809-2889 to see how it can help you systematically take advantage of the current market to upgrade or invest in your next property. Alright, let's move on next to HDB. HDB resale price grow at a slower pace of 0.9% in Q1, possibly indicating the settling in of the price resistance, as well as more homes being completed in recent months and increasing supply in the pipeline, also contributing to the softening price. HDB resale price rise 0.5% in March, SRX99.co. The biggest increase was seen in the price of 5-room flat and EZ. Overall, volume was up month-on-month with most transactions taking place in non-mature estate and for 4-room flats. Big jump in HDB resale flat that sold for 800 to 999,000 during the pandemic. The jump is also expected to bring more $1 million deal in the segment, especially in the mature estate in the downtown core or city fringe. Another increasingly hot segment is larger flat over 20 years of age, where more $1 million sales has been happening. Cooling measures in September 2022, rising interest rate and increasing price resistance is expected to keep sales slow this year, even while $1 million deals are projected to continue to grow. Home Quarters thinks that similar to the private property segment, prices have stabilized and are growing at a reasonable rate. The effect that the new round of cooling measure can only be seen when data comes in next month, but we infer that the effect will probably be subdued with more new launches in the core central region coming up. It will be interesting to see what the developer pricing strategy will be like given this round of cooling measure. So that's it for May 2023 Singapore property market update. If you're keen to work together with Home Quarters to help you systematically expose your unit for sale or to systematically purchase your dream home or profitable investment, text us at 8809-2889 or head over to homequarters.com.sg. My name is KC from Home Quarters. Subscribe, follow and like us on YouTube, Instagram and Facebook at Home Quarters SG. And lastly, remember, call Home Quarters and start packing.